Imagine waking up tomorrow to discover that every dollar in your bank account has become meaningless. Your paycheck, your savings, your retirement fund, even the cash in your wallet can no longer buy food, fuel, or shelter. It sounds like the plot of a dystopian movie, yet history has shown that the power of money depends on something surprisingly fragile: trust. For thousands of years, civilizations have fought wars for it, built empires around it, and sacrificed countless lives chasing it. Today, trillions of dollars move across the globe every single day, influencing elections, shaping industries, driving innovation, and determining the fate of nations. But here's the question almost no one asks. Why does money hold so much power over the modern world? Is it simply paper? A number on a screen? Or is there an invisible system operating behind governments, banks, and global markets that quietly shapes the future of every person on Earth? To understand why money rules the world, we first have to uncover the extraordinary story of how it became humanity's most powerful invention. Every civilization has worshipped something. Some worshipped kings. Others worshipped religion, military strength, or natural resources. But in today's interconnected world, one force quietly sits above them all: money. It decides which businesses survive, which technologies reshape society, and which countries rise or fall. It influences where people live, what opportunities they receive, and even how governments respond during times of crisis. Yet money itself has no heartbeat, no intelligence, and no physical power. Its influence exists only because billions of people collectively believe it has value. That belief has transformed simple pieces of paper and invisible digital numbers into the foundation of the global economy. Every swipe of a credit card, every online purchase, every investment, and every paycheck strengthens an enormous financial network connecting nearly every nation on Earth. But this system didn't appear overnight. It evolved through centuries of trade, innovation, conflict, and human ambition. Along the way, money changed from a convenient tool into one of history's most influential forces. To understand why the modern world revolves around money, we must travel back to where this remarkable story truly began. Long before skyscrapers, stock markets, or digital banking existed, survival depended on one simple idea: exchange. Early communities traded what they had for what they needed. A farmer might trade grain for tools, while a hunter exchanged meat for clothing. This barter system worked, but only when both people wanted exactly what the other offered. Economists call this the double coincidence of wants, and it severely limited the growth of trade. As societies expanded, people searched for something everyone would accept. Across different civilizations, shells, salt, livestock, and precious metals gradually became trusted mediums of exchange. Gold and silver stood out because they were durable, portable, difficult to counterfeit, and naturally scarce. Over time, rulers began minting standardized coins, making trade faster, safer, and more reliable. Commerce flourished. Cities grew into economic centers. Merchants traveled farther than ever before, connecting continents through expanding trade networks. Money was no longer just a convenient tool. It became the language that allowed strangers to trust one another without ever meeting. This simple innovation transformed local markets into thriving economies. Yet it also introduced a new reality. Whoever controlled the flow of money could influence trade, wealth, and eventually political power. The foundation of the modern financial world had quietly begun to take shape.
As money made trade easier, it also changed something far more important: human behavior. What had begun as a practical tool for exchanging goods slowly became a measure of success, influence, and power. Wealth no longer simply reflected what someone owned. It increasingly determined what opportunities they could access and how much control they could exercise over others. Merchants with greater resources could expand their businesses, buy more land, and hire more workers. Governments collected taxes to build roads, maintain armies, and strengthen their authority. Over time, money began flowing unevenly. Some communities accumulated enormous wealth, while others struggled to keep pace. The gap between prosperity and poverty widened. Competition intensified. Nations raced to secure valuable resources, dominate trade routes, and protect economic interests. Access to gold, silver, fertile land, and strategic ports often shaped political decisions as much as diplomacy or culture. Economic strength became a critical factor in determining national influence. For ordinary families, money became more than a convenience. It became a source of security, opportunity, and sometimes anxiety. A good harvest, a successful business, or a stable job could transform lives. But financial setbacks could ripple through entire communities. Money had solved many of humanity's oldest trading problems. Yet it had also created a new challenge. When wealth becomes concentrated, power often follows, reshaping societies in ways few people fully recognize. For centuries, wealth was limited by something physical. Gold could only be mined so quickly, silver had to be transported across vast distances, and coins were heavy, vulnerable to theft, and expensive to produce. As trade expanded across continents, the old system struggled to keep pace with an increasingly connected world. The turning point came when people began trusting institutions instead of metal. Merchants started depositing their gold with trusted money keepers, receiving written receipts that could be exchanged without moving the actual gold. Those simple receipts eventually evolved into paper money, making commerce faster and more efficient than ever before. Soon, banks discovered something remarkable. Most depositors rarely withdrew all of their money at the same time. This allowed banks to lend a portion of those deposits to entrepreneurs, farmers, and traders, fueling new businesses, larger industries, and economic expansion. Money was no longer just stored, it began creating more economic activity. As governments recognized the importance of stable financial systems, central banks emerged to oversee national currencies, manage interest rates, and maintain confidence during periods of uncertainty. The economy had entered a new era. From this moment forward, the true power of money was no longer measured by the gold locked inside vaults, but by the confidence people placed in the financial system itself. Trust, not metal, had become the foundation of modern wealth. By the 20th century, money had become far more than coins or paper bills. It had evolved into a carefully managed system designed to keep economies moving. At the center of that system were central banks, institutions responsible for helping maintain financial stability rather than simply printing currency. One of their most powerful tools is the interest rate. When borrowing becomes less expensive, families are more likely to buy homes, businesses invest in new equipment, and entrepreneurs launch new ideas. As spending increases, companies hire more workers and the economy often grows. But if economic activity begins to overheat and prices rise too quickly, central banks can increase interest rates, making loans more expensive and encouraging people to save rather than spend. Commercial banks play another vital role. Deposits from millions of customers help finance mortgages, business loans, infrastructure projects, and innovation. In this way, money rarely sits still, it constantly circulates through the economy, supporting production, employment, and investment. Confidence is the invisible engine that keeps this system functioning. People trust banks to safeguard deposits. Businesses trust customers to continue spending. Investors trust markets to create opportunities over time. When that confidence remains strong, economies can expand for years. But when trust weakens, lending slows, investment declines, and uncertainty spreads quickly. In the modern world, money works because an entire network of institutions, businesses, and individuals continues believing that the system will function tomorrow just as it does today. The modern financial system has produced results that earlier civilizations could scarcely imagine. Capital no longer remains confined to a single city or country. Investments can help finance factories, hospitals, research laboratories, transportation networks, and breakthrough technologies across the globe. In many ways, money has become the fuel that powers innovation. Over the past century, economic growth has helped raise living standards for billions of people. Advances in medicine, communication, manufacturing, and education have often been made possible by long-term investment and access to capital. Businesses can expand beyond borders, entrepreneurs can transform small ideas into global companies, and international trade connects producers with customers thousands of miles away. Yet every system comes with trade-offs. Economic opportunity has not been distributed equally. While some individuals and nations have accumulated extraordinary wealth, others continue to face limited access to education, healthcare, infrastructure, and financial services. Economic downturns, banking crises, and periods of high inflation have also demonstrated how quickly confidence can disappear. The financial system has therefore become both a remarkable engine of progress and a source of continuing challenges. It has created unprecedented prosperity, but it has also revealed the importance of responsible institutions, sound policies, informed decision-making, and public trust. The world has grown richer, more connected, and more innovative, but also more financially interconnected than ever before. If history teaches us anything about money, it is that wealth has never been simply about possessing currency. The civilizations that achieved lasting prosperity were often those that invested in knowledge, infrastructure, innovation, and the trust of their people. Money was the result of value being created, not the value itself. For individuals, the same principle applies. A paycheck provides income, but financial security is built through consistent saving, thoughtful investing, continuous learning, and responsible decision-making over many years. Short-term trends may create excitement, but lasting wealth is more often shaped by patience, discipline, and an understanding of risk. Another lesson is that confidence is one of the world's most valuable assets. Every successful business depends on customers who trust its products. Every investment relies on confidence in future growth. Every currency depends on public belief that it will continue to hold value tomorrow. Perhaps the greatest lesson is that money is an extraordinary tool, but a poor master. It can expand opportunities, support innovation, and improve lives, yet it cannot replace integrity, knowledge, or meaningful human relationships. Those who understand how money works are better prepared to make informed decisions rather than emotional ones. In the end, financial success is rarely about chasing money. It is about creating lasting value that other people recognize, appreciate, and willingly support. The next chapter in the story of money is already unfolding. Around the world, physical cash is becoming less common as digital payments, mobile banking, and online commerce become part of everyday life. In many cities, a purchase that once required coins or paper bills can now be completed in seconds with a phone or wearable device. At the same time, new technologies are reshaping the financial landscape. Artificial intelligence is helping detect fraud, improve customer service, analyze market trends, and support faster financial decisions. Blockchain technology has introduced new ways to record transactions securely, while many governments are exploring central bank digital currencies, or CBDCs, as a digital form of national currency. These innovations promise greater speed, convenience, and efficiency. Yet they also raise important questions. How should personal financial data be protected? How can innovation remain secure and accessible? What balance should exist between privacy, regulation, and technological progress? No one can predict the future with certainty. History reminds us that every major transformation in money has changed the way people live, work, and trade. The coming decades will likely be no different. Whatever form money takes, coins, paper, or digital code, its greatest strength will continue to depend on the same foundation that has sustained it for centuries: confidence. Technology may change the tools, but trust will remain the currency that matters most. We began this journey with a simple question: why does money rule the world? The answer isn't hidden inside a vault or printed on a banknote. Money has power because billions of people agree that it has value. That shared confidence allows strangers to trade, businesses to grow, governments to function, and entire economies to move forward. Remove that trust, and even the strongest currency becomes nothing more than paper or digital data. Throughout history, money has transformed civilizations, finance discoveries, connected continents, and accelerated human progress. It has also exposed inequality, tested institutions, and reminded us that every financial system depends on responsibility as much as prosperity. The future will almost certainly bring new technologies, new payment systems, and new economic challenges. Yet one principle is unlikely to change. Wealth is not created by money alone. It is created by people who solve problems, build trust, innovate, invest in knowledge, and create value for others. Perhaps that is the greatest lesson of all. Money may shape the world, but people shape money. The next time you make a purchase, receive a paycheck, or transfer money with a single tap, remember, you are participating in one of the most extraordinary systems humanity has ever built. And its greatest asset has never been gold, paper, or code. It has always been trust.